you have to be prepared for it to fall a lot, if it goes down 80% or something, but that limits the amount that you can have in it. So I don't know. I don't think a lot of Bitcoin.
In today's video, Ray Dalio, the founder of Bridgewater Associates, discusses where we are in the changing world order, the macroeconomic outlook, and the rising tensions between the US and China.
I think the main thing with China right now is, we're on the brink of war with China for various reasons. I hope we make it to 2050. The demographics as I describe it. And by the way, them losing doesn't make us winning. Just so we're look at that. We hope everyone gets better. And the world economy, we hope everybody has a better way. Everybody loses in wars. And so, that's their set of circumstances, and it'll be what it'll be. I think the most important thing is, how do we deal with our circumstances? How do we become strong and healthy, financially healthy, productivity healthy, and so on. So, we could talk about the demographic problem in China, which is just what we talked about before in terms of, does robotics and productivity and all that make up for that? I don't know. But I really think we're projecting too much on the outside world. Okay, what do we do with China? What relevance? Well, we trade with China. We don't have to go to a military war with China. I mean, why would we? We shouldn't do that. And then if that's the case, what's the problem with them growing? Okay, but it's not very much. Okay, let them grow and invent, and let us grow and invent and share the inventions. That would be good. But the problems that we're facing are pretty much our own problems, the things we're talking about, and the breakdown of infrastructure and, all of that. So really, I think we should focus on that. And, maybe their demographics is a big burden or not. They have other big burdens too. We all do. But let's focus on how we can be as good as we can be.
What do you think about the Fed's messaging about this soft landing thing? Is that possible? Like, historically, I don't think it's really happened, but do they have enough control over the economy to be able to make this work?
The big issue is that a lot of debt was created. A lot of it is government debt, but it is also corporate, to a lesser extent, household debt. So if you look at the Silicon Valley Bank issue, it's not so much their issue as much as a worldwide issue. And what happened is that, what's a bank? A bank takes in deposits, and then it takes that money and it invests it in things. And so they bought a lot of government bonds that had a higher yield than they were paying out in the deposits. There's a tightness of monetary policy, and those yields went up and the bonds went down in value. And then the amount they have to pay out went up in value. And so they went broke. And that is happening all over. That happens not only through banks as a whole did a lot of that, but insurance companies and so on, all around the world. Same sort of thing happened in Europe. Same sort of thing happened with Japanese companies even buying U.S. dollar bonds a lot. And so you have, if you were to mark those to market, you would have a terrible calamity. But what's going to likely happen is they don't want any more of those bonds. And we're going to have to sell more bonds because we're going to have a deficit. So when you have a deficit, you have to pay for it through selling debt. And there's a lesser demand for that debt. And I think that creates, a problem in which either interest rates go up or the Federal Reserve's got to come in and print. And this is a problem that exists also in Europe with the European Central Bank, the Bank of Japan, all of them. So that's where we are. And it has knock-on effects. It's like dominoes that fall. So it will produce less credit. And as it produces less credit, less demand, less credit, that'll produce less spending. It'll come in certain parts of the economy. For example, commercial real estate. For example, venture capital and private equity. For example, low-grade bonds where they have a heavily indebted company and the interest rate goes up a lot and that causes problems. So I think you're in the part of the cycle where you've had the tightening and the dominoes are beginning to fall. And I think that's going to produce more problems. So I think when it comes down to it, there's just too much debt and we're adding it to it too quickly. And so it's going to, either that debt will be paid off with hard money, in which case there's not much printing and so on, or it'll be paid off with printing a lot of money to make it easier to pay off. I think in the end, it's always the case that they print a lot of money and make it easier to pay off, but you have the reduced value of money. So that's how it looks to me. You'll have probably a stagflation environment. And because you have that dynamic going on at the same time as you have supply chain disruptions because of the geopolitical, I think it's going to be a difficult environment. The most important thing, as I say, is to have this basic, well-diversified. And, there's some assets and think about different, a small percentage of your money, even an asset like gold and diversification for countries, to create a diversified portfolio is important.
One of the things that did occur, you mentioned Silicon Valley Bank there was a big bump in terms of Bitcoin and other cryptocurrencies around about that time. And it seemed like one of the first periods where people genuinely saw crypto as a store of value, as a way to just, I need to put my money somewhere that I feel is safe. And given the last 18 months of what's happened with crypto, considering that as that's the place I'm going to store my assets in order for it to be safe, I think said quite a lot about how people sort of perceived the state of the dollar and the security of banks and stuff at the moment. What's the role of Bitcoin or cryptocurrency in the current economy in your eyes?
I think cryptocurrency or Bitcoin doesn't move in a reliable way related to almost anything. It's, moves up and down because of this mood and that mood. Unlike gold, let's say, I would prefer gold and I would prefer crypto for various reasons. Crypto, it's very easy to track the owners and transactions in it. It's not liked by the government. It doesn't move in a way that's consistent with, kind of any of the environments. And it's a small asset class. We talk a lot more about it, but its size is about, 30% of the size of Microsoft, and Microsoft is one stock among many stocks. So, it's given probably a lot more attention. I don't know, who knows, maybe, there's some element of it. I don't understand why people are more inclined to go to Bitcoin than gold. If you look internationally, gold is for central banks, the third highest reserve asset. First is dollars, then euros, then gold, then Japanese yen. And central bankers are buying gold, and they're not buying bonds. And it's, timeless and universal. It's been there. So, so I'm not a big fan of it. As I've said before, having a little bit, I have a little bit of it, but if you have a little bit of it, you have to think about those things. And, like I said, you have to be prepared for it to fall a lot, if it goes down 80% or something, but that limits the amount that you can have in it. So I don't know. I don't think a lot of Bitcoin.